Okay, I think we're ready to roll. So, hello everyone, and thank you so much for joining us this afternoon. We have gathered a multidisciplinary group of experts in order to analyze the latest trends in digital transformation and the effects of the current pandemic over banking and open banking specifically. Lucky for us, we have the opportunity to learn from a first-tier bank in North America, the largest insurance company in Japan, a global financial software vendor, and an Israeli vendor which developed a unique technology driving digital integration to the core. However, first and foremost, it is my absolute honor to host Professor Karnit Flug, the former governor of the Bank of Israel, who will share her view about the fintech industry and the attempts to narrow the gap between banking regulation and the needs dictated by the digital era. Karnit, thank you again. The floor is yours.
So actually, technology has always played a role in finance, but we focus on the latest, and we moved from, the computer era, mobile apps to big data, and that's where we are right now. And the areas of fintech innovation which are relevant to us are in lending, in payments, in regtech, detecting fraud and compliance, in asset management, in insurance, in data services, in customer engagement, and obviously in cyber. Fintech has the potential to really transform the financial sector, both for banks in terms of how services are provided, in terms of efficiency, managing risk, enhancing competition, and it changes and transforms the experience also for clients in terms of costs, customer experience, and transparency. And so technology adoption is really a must to manage the strategic risks for the industry, and the business model needs to be updated accordingly. From the latest report of the banking supervision in Israel, you can see the gradual rise in the share of activity which is done outside of the branch. Now it's about 2/3. I shouldn't say now, I should say in 2019. And at the same time, the cost of actually managing a bank account has been going down, all of that pre-COVID-19. Actually, the only budget item that has been rising in the bank costs is the spending on IT. In Israel, banks have been engaged in cost-cutting measures on employees and on branches, closing branches. And the only item that has been going up is actually IT, and obviously with that comes also spending on cyber. When we look at what happened very recently, obviously the COVID-19 actually accelerated the adoption of new technologies, both in the consumption of services. There are indications that the use of digital trading in financial assets, for example, is soaring in digital payments. And also the banking supervision, and I guess supervisors around the world have accelerated the elimination of barriers to digital activity. The Bank of Israel had reduced some barriers to KYC by digital measures and digital transfer of securities. And we've also seen an acceleration of new technologies in the production process. For example, the most obvious example is the very large share of employees that moved to working from home. But also in the production process, we've seen a very rapid change. And here I just want to give an example. As you probably know, the banks were encouraged by the supervisor to reschedule, to allow the rescheduling of mortgage payments. And there is one bank that actually used to have about 3,000 requests a month to defer mortgage payments. During the lockdown, actually that went up to 3,000 requests per day. And initially or always there were clerks who were taking care of these requests, but very quickly the clerks were completely overwhelmed. So the bank actually produced a bot to deal with these requests. So on the first day, the bot took care of 80% of the requests, and the 20% more complicated ones were moved to clerks to deal with. But very quickly, actually within a week, using AI, the bot was able to handle 100% of the requests. And so the problem of backlog was eliminated. So this is just a small example, a real example of the very rapid adoption of technology. When we look at the share of actual employees that moved to work from home during the crisis, you can see that financial services is among the highest. Actually, at the peak of the lockdown, 40% of the employees were working from home. It went down as the lockdown was slowly removed, but we can see here the potential of very rapid move to distant working, actually second only to the high-tech sector as a whole. There are indications, for example, from a report of Deloitte of storing use of new digital tools. In Latin America, there are 30 million new customers that for the first time actually used online transactions. And there are indications that these shifts in the way people consume services are here to stay. And we all know about the very successful issuance of Lemonade, which is a fully digital insurance company. And I'll just quote here what they're saying in their advertisement. Maya, our charming artificial intelligence bot, will craft the perfect insurance for you. It couldn't be easier. And that's just, their success is just an indication of how rapidly this transformation takes place. So also regulators actually discovered during COVID-19 the potential of digital services, and the IMF, for example, in a June report mentions that digital financial services are enabling governments to provide quick and secure financial support. And the Bank of Israel, in one of its statements, says that digital banking is an enabler for business to deal to provide services at times of crisis. So they all recognize the potential, but obviously regulators are focusing on risks, and there are risks in this process. One of the major risks that we're aware of is the competitive impact of big techs and the unbundling of services, which may undermine traditional banks and their business model relying on legacy systems. And that may erode profitability, which may actually induce the reduction of standards of lending and therefore increase the risk taking. We should acknowledge that the regulation of big tech provision of services, of financial services, is lagging behind. Also, the reliance of third-party data services and the concentration among providers may actually pose a systemic risk. operational failure or cyber incidents and so on. And the reliance on new technology obviously introduces also more generally operational risks and cyber risks. There is another risk which we're very much aware of in the public discourse, and that's the need to actually provide adequate services also to the non-digital population. By the way, in a survey that was conducted among managers in the banking sector, they ranked cyber risks and technology and business continuity as the most severe risks which are on their mind. So the digital transformation brings about the intensification of these risks. So regulators, while embracing new technologies, see these risks and they pose challenges to regulation. By their nature, regulators are focusing on financial regulation, and the traditional regulators have relatively scarce technological skills. In order to acquire these skills, they need to compete with the industry, and their system of compensation and agreements is relatively rigid. So the ability to compete is somewhat limited. And without those relevant technological skills, prudence by regulators implied slowing down the adoption of new technologies, especially those with the unknown risks, unknown to regulators. So I would say that the prerequisite to adjusting the regulatory framework is a recognition that allowing the adoption of new technology is really necessary. It's a must. Now, the international guidelines for regulators issued by the Basel Committee says the following. What they say is that fintech has the potential to transform traditional banking and change the business model, and therefore regulatory framework need to be reassessed and adequate resources need to be allocated. And regulators need to ensure that adequate labor input with the relevant skills are there in order to deal with the new business model. So what has been the approach by various regulators to this challenge of allowing actually the adoption of new technology? You can see here the range of approaches. Establishing a regulatory sandbox. By the way, in Israel, it was just recently announced that in the coming budget, there will be also an introduction of regulatory sandbox. Innovation hub, accelerator, open banking, also, by the way, in progress in Israel, cyber defense for banking system, and the protection of privacy. You can see the various countries using the different approaches. So what has been done in Israel? In Israel, the banking supervisor adjusted their supervision structure by actually adding a new section, which is called Technology and Innovation. And its mission is to foster innovation and the adoption of new technologies while addressing risks. And for this purpose, they're acquiring expertise and developing processes and tools to manage technological risks and cyber defense. This section is actually moving to reduce the regulatory barriers that inhibit innovation, ensure risk management of these risks, especially the heightened cyber risk. It actually is leading technological transformation projects such as open banking, the transfer from one bank to another with the click of a button, and digital guarantees. And it's promoting digital education and advising and leading digital finance training, both to banks' employees and to the general public. So in sum, we're on the fast track to a new world in banking and in financial services at large. This entails a move to digital, robo-advising, closing branches, reducing the number of employees, and transforming legacy systems. The digital transformation is underway. It started in a gradual pace of an evolution, but the COVID-19 may have turned it into a revolution. And regulation should embrace the change while making sure that risks, both old ones and new ones, are properly identified, monitored, and addressed. So,
Perfect, Karnit. Thank you so much for shedding the light on the regulation and your view on fintech. I think you've covered some of the topics that we would like to cover today. We have Romi to discuss about legacy systems and others to discuss regulation. So let's switch gears and move into the second phase of our webinar. With your permission, please allow me to introduce our panel of specialists and practitioners. We have Ravi Acharya, Head of Enterprise Innovation for TD Bank. We have Eran Vitkon, Head of Open Banking in Finastra, Yinnon Dolev, Head of Sompo Digital Lab, and my dear friend Romi Stein, the CEO at OpenLegacy. With the help of my fellow experts, we will dive deep into the practical and technological aspects of digital transformation in the current COVID-19 situation. Let me just start by saying that one of the biggest myths surrounding digital transformation is that it is a simple one-off project. However, we all know it is much more complicated than just turning on a switch. It is an ongoing process that should evolve along with technology and end user expectations. So let's kick off. I think we have some regulation issues to cover. So I want to start with Eran. I know you're well familiar with the regulation aspects of digital transformation. How are these addressed at Finastra?
Well, we are serving, first of all, let me make sure that you can hear me well.
Yes.
Okay. We, Finastra, we are a global company and we serve many banks. As such, we sell legacy systems that later on maybe Romi will treat. How to take a legacy system and actually convert it to be an open banking system. And it's very difficult because these systems were designed 30 years ago. These systems were designed for internal branch officer and for the teller. And all of a sudden, with open banking, you need to make these systems available for the end users. And for that, it is not just a transformation from one format to another. You have to actually break a monolith, a big system, into small services. And that is a very difficult task. And it takes time, and it has a lot of challenges. So at Finastra, what we are trying to do is assisting our banks with tools and platforms and technology to be able to convert and do this journey of open banking. And I must tell you, with all honesty, that it is a long journey. We are at the beginning of the road. So many things need to change, and it's not going to be something that is easy to do.
Thank you. Another word about regulation, maybe Ravi from your side, after Karnit has educated us about regulation around the world. So my question would be whether regulation is really a driver for adopting digital transformation and open banking, or is it actually the other way around, meaning the regulation is holding open banking from being developed? Ravi, if you can address that.
Yeah, hope you can hear me, Yaron.
Yes.
And thank you for the question. I think, you know, I'll tell you, given the recent COVID instances, right, regulation has actually been really helpful. I think the more we can, get regulators to understand, right, and they see that consumers need it, I think Karnit brought up some really good points about also understanding the risks, known and unknown, right? And getting the regulators really intelligent and smart about understanding how the technology could really help the customer, how the technology could actually take away manual processes, which, as we all know, every time there's a manual process, there's a higher degree of error, right? There's there's less repeatability. So I think personally, regulation will be a huge driver. Luckily, due to COVID, I think governments across the world have realized the need for making regulation go faster.
Perfect. Thank you, Ravi. So let's tackle our thoughts about the COVID-19 effect. We can't avoid it, obviously. So we've seen new phenomena accelerate, and the world continues to be turned upside down by COVID-19. Banks are having temporary closed retail premises and offices, pushing the majority of customers online. This has obviously exposed a gap in many banks' digital transformation programs, which were primarily centered on self-service on-prem rather than replacing face-to-face delivery processes. Surely COVID-19 has caused some changes regarding financial institution approach toward going digital, forcing them to accelerate their digitalization plans. Yinnon, can you appreciate if you can address this hot topic from Sompo's angle and share some inputs from Japan?
Sure, no problem. Thank you, Eran. Obviously, everybody's now working remotely. That's common sense. But let me focus on one thing that is a particular challenge for the insurance industry in Japan. For example, the life insurance business deeply relies on face-to-face interactions between agents and brokers and customers. More than 70% of sales of the entire industry is done through such interactions. Also in commercial insurance, when you sell to companies, it's very heavily reliant on a relationship between the sales rep or the broker and the customer. That's no longer possible. So now you have an entire industry with sub-segments have to transition all the commercial activities, their sales and their sales supports and the contact centers to deep digital. Also, customers are interested in Facebook and Google type experiences, while the entire industry is actually shrinking. The net premiums in Japan for insurance is the compounded annual growth rate is going down. So on the one hand, we have customer expectations wanting deep digital. On another, we have a deep pressure to cut costs and create efficiencies. And then comes COVID-19, which tells us you can't sell the way you used to in the past. So for us, not only it's not a luxury, it's an imperative. And I predict that regulatory constraint barriers will be lowered to enable that.
Thank you. Romi, to you. So we know the crisis has halted many processes, but led to the creation of others. The banks have demonstrated impressive efficiency in their adaptation to the situation in digital transformation. However, I'm wondering, is the situation here to stay? Have the traditional banks made the necessary adjustment for digital transformation revolution? Now, I know you guys at OpenLegacy is serving a decent amount of traditional banks. How are you observing their adjustment to the current atmosphere?
Sure, and thank you, Yaron. And maybe I will start actually first by relaying to Yinnon's point as answering to your question also that it's not just only about customers or giving COVID-19, if we're talking about COVID-19, for example, is actually the fact that you also need your employees that now are working remote, as Karnit alluded earlier, 40% in financial services, which is an interesting number, first time I see it, are working remote. That means that you need someone to open, or I should say to operate the back-end processes. So now you have the employees, not just the tellers, but actually the ones that are working in the back office, doing kind of the back-end processes, the most complex stuff that you need for the workloads of the bank. So now how do you get them to work? So that's why you need the digital transformation, actually, not only for the clients, but actually for your own employees, so they can have access and able to work remote and also use more of digital channels or other more productivity tools for employees. So from that perspective, obviously, and I think we talked about it earlier, that there's no doubt that COVID-19 or not COVID-19, the situation is here to stay. And I would say that most of the clients that we are seeing in the market going through digital transformation have already begun through that prior to COVID-19. And in fact, COVID-19 has already accelerated it. And for those who have not started it or have not thought about it, definitely, I think they're not in a good competitive position, and they're rushing now to get back with the herd. So in the end of the day, I would just mention that no doubt we're going to see acceleration. No doubt it's not just about customers, it's also about internal, I would say, digital processes and opening up the legacy systems. And the one last kind of point I would leave, we heard legacy here. Legacy is always very easy to blame. We have legacy, we're a traditional bank, we cannot compete in the market versus fintech and startups. And that's actually not true. The fact that you have legacy, you have a very good system that works and has been done very good things for you over the years. And what really most of the challenges is actually not the legacy itself, but actually the digital channels that have been built, or the older digital channels, which we call the middleware, or kind of the lasagna that has been put in place for 10, 20 years. And that's actually the stack on the infrastructure technology-wise that needs to be kind of re-looked and re-examined. How can you accelerate it so you can move to more modern cloud-type technologies relating to bringing the processes that already you have, so extending them rather than replacing them. And that's actually exactly where we're playing, but I will give it back to you, but just as a quick intro.
Thank you, Romi. I see Ravi nodding. I guess I know why. So as Romi said, digital transformation is not only the front end and the customer facing. You have a lot of stuff to do at the back end. Now, I know you guys at TD are facing that, and then in your answer, Ravi, I would also appreciate if you can address how TD is adjusting to this new atmosphere facing in the traditional banks.
Yeah, absolutely. So I'll give you a couple of examples. So, TD was on a digital journey, for the last few years, but there's a lot of processes that may have a digital front end, but right, the back end is all manual, right? I think Karnit and Romi kind of mentioned that, right? But I'll give you an example, right? So the U.S. government decides to kind of give, small business help, right? The PPP loan program, and every bank over here gets flooded, right, with applications from small businesses, because every business wants to kind of, get in line fast, completely creating this huge backlogs in the back because, even though we had digitized the front end, right, things didn't actually go into a back-end system. There's a lot of manual keying. I do agree with Romi, which is like, I think the issue is not the kind of legacy system. It's all the middleware in between, which was built like it was almost built on a point-by-point basis versus someone kind of thinking about the entire architecture. I think that's something that needs to be fixed. The way we are addressing it is short term, we're trying to do a lot more robotics so that we can kind of like take away the immediate pain while putting in the long term, like, the kind of the middleware, when you think about like the services layers that we need to kind of then adapt to the new environment, because the new environment, I mean, think about it, right? A lot of those middleware services were built when it was like, oh, here's a back-end platform that only looked at an employee. Then someone said, oh, but I need like access to an ATM. And then someone said, oh, I need online banking, right? And then someone said, I need a mobile. And all those were built as individual versus like building a collective that can kind of like, you can kind of change once and have multiple. So we are on a journey, we are accelerating our journey, and we'll talk later on about how we also need to be careful about kind of, like making sure we're not getting too far ahead of our customers.
Thank you, Ravi. Eran, no worries. Next question is to you. Let's switch to fintech. So we all know that the current crisis could ultimately end up benefiting the fintech industry by accelerating the rush to digitalization. And Karnit mentioned the Lemonade IPO, which I'm sure made a few insurance companies to sweat a bit. Maybe Yinnon will touch upon it later. But a more downbeat assessment forecast that as funding sources dry up, struggling fintech firms may be forced to seek collaboration, investment, or acquisition by traditional banks. So I'm wondering, how will the current atmosphere affect fintech companies in the short term or the long term? What will be the traditional bank approach toward fintech? Are we going to see homegrown solutions by the traditional bank and insurance companies, or will the current crisis spur a consolidation between the traditional and the fintechs? Eran, I'll be happy if you can go first.
I will start by saying I don't know what will happen, but I can certainly indicate that collaboration is a must for fintech, and I agree that liquidity is a problem for everyone in the market, and therefore with a better collaboration, and you don't get the whole cake, but at least you keep some of the cake for you, you are able to actually move forward in these very difficult days. We are trying to assist our clients, our fintech clients, by doing this collaboration in an easy access to the bank application. We hope to tie one hand the fintech, in other hand the bank, together so that banks already have clients, right? They have billions of clients and fintech don't. And fintech needs these clients in order for them to start generating revenues. And this is where the glue is. We hope that we are the glue, that we can sit in the middle and connect them. And so I do believe in collaboration, even between fintech to fintech. I have seen two fintechs joining together and creating something that is better than each one of them individually, just because they can. And the integration these days for the fintech is relatively simple.
Perfect. Would you guys say that actually fintech initiatives are, in a way, the fig leaf of the traditional banks, claiming they are really adopting open banking initiatives, while actually they account for only a limited portion of the real banking activity?
Definitely.
So the answer is yes. Actually, I wanted to ask Yinnon, but for some reason it left us for a second. So maybe Ravi, you can address that. Is that so?
I'm back.
Okay.
I'm here.
Okay. So Yinnon, did you hear my question?
No, please repeat it.
Okay. I just said that my feeling is, in a way, that the fintechs are current, in a way, the fig leaf of the traditional banks that's saying, hey, we are going digital, but actually they only cover a small portion, a limited one, from the real banking activity. What do you think of that? So Yinnon is a little stuck.
Yeah, as it's a must.
Ravi, your approach toward that?
Yeah, I'm on. I think Yinnon's trying to say something, so I was trying to give him a chance.
Thank you. As I mentioned earlier, digital transformation is a must, at least in the insurance sector, because it comes down to one thing: customer experiences. Gone are the days where you can submit a form to an agent and wait for a week until you get some response, etc. It has to be more instantaneous. It has to be more user-friendly. And it has to drive immediate values for the customers. So I don't see this as kind of a lip service that you have to pay for to be able to say, hey, I'm digital. It really is a necessity. Executing it is very hard, especially in traditional industries. But I think we have no other choice, because we have those pressures, like reducing the cost and changing the way we do business, as I mentioned earlier.
So a different question to Ravi. Do you think the traditional bank will actually become digital, or we will witness the establishment of new banks that are created digital from day one?
So, I'll give you my perspective. I think there's traditional banks that have been around for many years, right? I think they have the biggest thing that banks do, right, who have been here for a long time, is they establish trust, right? Customers implicitly, basically trust the banking system. This is not to take anything away from fintechs, right? This is not to take anything away from new banks. I think what new banks do really well is teach us how to become better, right? Because sometimes we forget. Sometimes we stick to our old ways of doing things. They really help us, realize that, hey, if someone applied for a loan, it should not take us 30 days to decision a loan, right? And to fund it, right? So we are learning from them. We're learning and becoming faster. But, in my view, I don't think a new bank will take over from traditional banks. I think traditional banks will move faster. They'll be forced to move faster. Very similar to how my father, had to use FaceTime because that's the only way he could chat with his grandkids in America. So, was he, it's like he wasn't a tech guy, but now he's a tech guy because, we adapt to the needs of the people that we want to serve. So I do think that the traditional banks will move, and they may not move as fast because I think traditional banks, like what Karnit said earlier, traditional banks have millions of customers. You cannot move fast because if you move fast, you risk impacting a percent of them, and a percent of a million could be a large number, right? New players do not have to worry about that. They don't have customers. They should move faster, and then we can learn from them.
I'm sure Romi must say something about this one.
Yeah, no, I'm trying to be polite, kind of answering because I'm in the startup world, so to speak here on this call. But I have to say that I do feel sometimes that the trusted enterprises are paying sometimes leap tax, so to speak, by kind of introducing different fintech and insurtech as part of the innovation. So it's always a combination of both. And I think the challenge again is that, I would challenge that it's not suffice just to taking a nice insurtech and collaborate on just the digital side, but really connected to the back end. Because a lot of time we come in and we see kind of glorious POCs and pilots, and it works really nice. And then you ask, so how many real workload services are connected to that? And they say 1 or 2. So obviously, in the end of the day, it's the matter of, I think, traction, volume, and bringing real backend processes. So only when you are connecting the new digital, so it could be self-innovation by the bank, and there's a lot of good innovation happening more and more in the banks themselves, and or sourcing in fintechs or insurtechs that provide specialized solutions that doesn't make sense for the bank to build it, so it makes sense to collaborate. But then the question is, the collaboration really goes kind of across the stack, and I would say that we are seeing more and more collaboration going across the stack than probably a year ago. So I don't know if it's because the digital transformation or COVID-19 or what have you, but I think the direction is more positive. But we have seen in the past, I think, innovation for the sake of innovation, and I hope that's changing.
Yeah. Hey, can I just jump in there for a second? Because Romi, 100% agree, right? 100%. Because I would say 5 years ago, 3 years ago, there was a lot of innovation theater, right? It was like, oh, look at this cool space. And it's got like foosball tables, and it's got like, cool chairs. And that's our innovation lab. I agree with you, which is, our goal at TD right now is how do you innovate at scale, right? It's not about a flashy POC, which goes nowhere, right? It's how do you do it at scale? How do you do it front to back? How do you like really create business outcomes versus getting media headlines because we launched some app and, it had like 5 people using it, but who cares, right? So completely agree, Romi.
Ravi, feel free, as the only non-Israeli here, you're always allowed to jump in. That's fine, that's our nature. Let's switch to competition for a second. So let's take China, for example. We see Alipay and similar tech services already controlling the payment system, filling the role of traditional banks. Do you think other banks around the world are going to face similar competitions from the techies, from Amazons and the Googles of the world Is this a real threat for them? I mean, we spoke about the fintechs accelerating the traditional banks going digital, but there are, you know, the elephant in the room over there. Eran, I know you have a view on that.
I think that the answer is yes with an exclamation mark. And I can tell you that the first candidate that I want to see in this market is Google. And I can back up this statement by telling you guys that in the open banking in Europe, that is called Payment Service Directive, it is allowed for new entities to register as consumers of data. They have to register because it must be secured. And Google did register. And I envision that alongside Google homepage, I will see upon need my balance. If I'm looking for a new camera, it will show me the price of the camera and my balance. And if I'm lacking the funds, maybe a hint that they can give me a better loan. And actually, that is no less than amazing. And I do expect the big tech to rattle the boat here. And I do think that they will do it eventually because of the fact that Google already have a license. And the only thing that they did not do is they did not act yet. I just say, okay, it's a matter of timing, maturity, but they will come. They will not, unless I have, you know, they have some secrets, but they would not register just for registration purposes. They will register because they can do it. Now, unlike a bank that knows everything about my finance situation, Google knows that now I'm in spot. They know that I'm traveling with friends. They know everything about me. So they have a significantly better chance of selling me something in the financial area than to a bank, knowing that where I am now, right now, and what am I planning to do tonight.
Yinnon, I want to hear your thoughts about that, and please give me the insurance angle. We spoke about Lemonade. Obviously, insurance is a sector that is always and also adapting digital transformation. Do you feel that insurtech startup solutions are more advanced than the fintech solutions ones? Any revolutions with underwriting insurance policies?
I don't know if they're more advanced, but it definitely follows similar paths when it comes to either, you know, using AI in core processes like underwriting, claims management, in customer experiences and other parts of the process. In the insurance sector, the competition is actually coming from completely unexpected directions. For example, in Australia, the #1 property and casualty insurance company is today Qantas, the airline company. In Japan, 7-Eleven has started selling life insurance policies. And so if you're asking kind of what's the common theme here, I'm less concerned about companies like Lemonade, which has to be measured by traditional insurance metrics like loss ratios and combined ratios, and more about non-traditional players who can provide some added value in it that can be co-branded with insurance. It's hard to expect who those might be, but one thing is certain: the insurance industry, as is, must change to compete over the customer's share of pocket.
We are approaching toward the end of our time. Despite that, Ravi, any new opportunities in talent acquisition those days following COVID-19?
Yeah, you know, I'll tell you, I'll tell you a story because I think it'll explain, right? I think many people, you know, you live in a certain place, you're working in a certain place, your family is there, your extended family is there. So we had a person that was sitting in our Toronto offices, you know, born and raised in Canada, right? Family in Toronto, worked for TD Bank, and had applied for a job with one of these big tech companies, and, you know, got a job offer to move to San Francisco. Right now, I don't know how many of you know San Francisco. Super expensive place to live, right? He's going to have to move his family. You know, he's trying to figure out, do I take my kids away from the grandparents? And COVID starts, and literally he gets a call 3 days later from this big tech company, and the big tech says, you do not need to move. You can work from Toronto. You have the same job, you have the same pay, you have everything, and you can move from Toronto. It took this person 5 seconds to run into the office to tell us, I'm out. I'm going to work for this big tech company. So I think with COVID, we have shown that people can work remotely, right? We don't need, I don't need to be in Jerusalem to kind of work with Yaron, right? I could be in the US and basically work with Yaron the same way. So from a talent perspective, the question I ask people is, do you want to be the predator or do you want to be the prey? And you have a choice to make. And that choice is, I think it opens up avenues where I can now go and find talent across the world, hopefully in plus or minus 3 hours time zones, right? So that's not like crazy, but just opened up a huge pool for us. And, I hope that companies realize that and move fast versus like realizing it too late, which banks always realize things too late. So that's our specialty, by the way, is we realize things too late.
Okay.
I would just have to add that don't discount the IRS, the Internal Revenue Services, because they're the ones who are going to make this global employee pretty hard, pretty challenging. So you might be able to hire someone, but then you might have to pay taxes in different places. But no, I agree with everything you said, and I think it's inevitable. So sorry, Eran, back to you.
Romi, watch out. We have an ex-representative of the government of Israel here with us.
I was talking about global. So not
okay,
on
okay.
IRS, yes.
That's okay. Okay, question to everyone. The latest Wirecard collapse. I mean, I'm sure we all heard the news about the collapse causing millions of clients to be locked from any ability to access their account. And there is the Wirecard is a famous fintech company. Does it mean that we have a long way to go before we will see fintech payment companies really taking a bigger portion of the traditional bankroll as a result of those kind of incidences? Anyone can take it. So it's for you, Romi.
Okay. No. So I'm probably the less qualified to answer this one, as I'm on the startup side. But I would say I obviously this is going to be a blow to some of the fintech ecosystem to some time. But I think for the long run, it's really not going to change the dynamic of. So whoever is going to provide better services, better customer experience, better digital, most likely is going to be on top. So obviously this is a long-term play. So I think eventually it will disappear from a negative impact.
Yeah, I would tend to agree with Romi, because I think customers, like remembrance is not long, right? I mean, customers tend to forget. I think customers choose convenience, they choose speed, they choose price over a lot of other things. I think what the Wirecard thing just points to, and by the way, I'm a fan of like good regulation done, like enforced, versus like a lot of too much regulation not enforced, right? Because that then acts as a barrier. It's like, to me, the Wirecard stuff is like, how do you kind of like get better about applying those rules? But like Romi said, I think, people will forget Wirecard, like just like people forgot all the Uber issues, like, a few years ago, and moved on, right? People still take Ubers, people still move around. So I think convenience trumps all that.
Another perspective of that is from the point of view of investors, from capital market investors. I think that when they look at a stock or the performance of a company, from that perspective, the strength of a compliance policy and checks and balances that enable that such affairs will not repeat themselves are key when looking at in that regard. Actually, traditional players have a better history. In general, they have better compliance and checks and balances mechanisms rather than younger type new entrants in the market. So I would suggest kind of looking at that, and when you talk about legacy versus newcomers, That's one risk that I think is more mitigated on the legacy side than new entrants.
Yeah, the one thing I'll add though is that digitization will actually help that, right? Because I go back to having run business units before, right? The more manual your processes are, the harder it is for you to prove that you are actually doing things correctly, right? And I think the regulators, like, they ask you very simple stuff, which is like, can you show me that if 100 times you said you're going to do something, you did it 99.95 times? Really hard to do in a manual way, very easy to do digitize. So I think that's also a reason why you digitize more.
Okay, I must, as a moderator, I must create discipline over here. So final remarks. I'll be happy if Karnit could join us for the last part. A quick survey about digital transformation. We'll go with a simple agree, disagree answer with your permission. We'll start to Karnit, Ravi, Yinnon, Eran, and then Romi to conclude. So here are my phrases. Digital transformation is a company-wide effort led by the CEO. Karnit. You're on mute, Karnit, but it seems that you agree.
Yes,
led by the
CEO and by the demand.
Yes, 100% yes. It has to come all the way down from the top.
Yinnon.
100% yes.
Eran.
Agree.
Romi.
Me too, yes.
Okay, that was an easy one.
It's a simple one, yeah.
Yeah. Most businesses are just starting their digital transformation journey. Karnit.
They are, but as I said, we're in the middle of a revolution right now.
Ravi.
I would agree. I just hope they continue with it and not forget about it the minute COVID lockdown ends.
Yinnon.
Agree, the beginning of the road, hoping to see more government branches take on digital transformation capability.
Eran.
Agree. No way back. One way.
Mr. Stein.
Yes, same here.
Okay, I need some conflicts here. Everyone agrees. Digital transformation should amplify human capabilities, not to replace them.
Agreed.
Ravi.
I would say yes, because humans like interacting with humans.
Something that we're deprived somewhat during these days.
Yinnon, let's do it quicker.
I think in general, I tend to say yes, but we can't ignore the fact that some digital practices will automate the human work of people. So works will change, but in some cases, it will also reduce costs. In some cases.
Mr. Vitkon.
Agree with Yinnon.
Romi.
Yeah, I also agree with Eran and Yinnon. I will just say that obviously digital does make things more productive on the manual side, but I think the human capital is moving to more productive areas like always.
Okay, I'm buying lunch for the first one who disagrees.
Disagree.
Last one. Organizations don't need a digital transformation strategy. Business strategy should be built around digital capabilities.
I'll pass on that one.
Ravi.
Yeah, I think we all agree. I would say definitely agree.
Yes, I think your business strategy needs to include digital and not the other way around.
Okay, I'm hearing agreement around the table.
No, I actually disagree.
Oh,
I think that in the future, yes, 100%. But now, if you don't pay enough attention and deploy resources and capital with a specific strategy, it won't happen. So ideally in the future, yes, but now disagree.
Thank you, Yinnon.
Yaron, can I ask you a question which people would disagree with?
I'm not sure I agree that most businesses are just starting. I think we are way in the middle, and which brings me into my closing statement. So first, thank you so much, all of you. I think it was very interesting and inspiring for all of us. And thank you for the lovely dynamics here. Thank you, Karnit, for the opening words and for sharing your inputs with us. I would say the following. So we've talked about the different drivers to digital transformation, regulation, COVID-19, customer needs, the need to stay relevant. In my opinion, COVID-19 is the driver that pushes digital transformation to the front of the line, forcing all of the drivers to line up. I truly believe that in the next 2 years, we will see most banks, yes, including you, Ravi, most banks are getting fully digital and increasing consolidation with fintech. And I'm afraid that those who remain behind may find themselves replaced by those lemonades. My guess that all of we're tracking the unbelievable, IPO of Lemonade. We have no other choice but going digital. And my assumption, 2 to 3 years, all of us are fully there. So I conclude by that. Everyone have a great weekend. Thank you all for having your inputs, and thank you all attendants to having the patience to listen to us. Hopefully we'll meet up soon. Thank you. I'm concluding by that.
Thank you. Bye-bye.
Thank you.